as we have discussed, we are going to be looking at the general capital assets in this particular chapter, and we're going to be talking specifically about how we treat the acquisition and depreciation or amortization, if applicable, to these general capital assets, and how we go about showing them in the financial statements, both at the fund level and the government-wide level. We're going to be talking specifically about land improvements, buildings and improvements to buildings, machinery and equipment, construction work that's in progress. Think about it. When the government makes bridges or roads, things like that, they take a long time, and they may not necessarily be able to be finished within 1 year or maybe even 2 or 3 years. So we're going to have construction work in progress for quite some time. All right, so we're talking about infrastructure assets, and we may also have intangible assets for a government. So let's talk about the fact that when we need to account for them is when we acquire them, whether we are purchasing them outright or actually having someone build them or make them for us. Now, we could have government employees building or making things, or we can actually have this contracted out to a third party. This would not only be acquisitions, but also any improvements or maintenance made to these kinds of things. So we could have improvements, but we could also have just general maintenance. All right, so with some of these, we're going to have depreciation, and with others, we may have amortization. With some of these, no depreciation or amortization may even be applicable at all. All right, so we need to keep that in mind as we move forward in the material. Again, also think about the fact that we're going to have to record and show at the fund level and also at the government-wide level, and we know that those reports have some differences. So, we've got a couple of terms that you need to make sure that you understand before we proceed on into the material. Again, when we're talking about general capital assets, that term refers specifically to assets that have been acquired by governmental funds. And governmental funds, if you think back, when we looked at the governmental funds, those were specifically one of 5 types. We said the general fund was a governmental fund, special revenue funds are a type of governmental fund, capital projects funds are governmental funds, and we also said there were debt service funds and even permanent funds back in one of our earlier chapters. And when we acquire them through one of these types of funds, especially if we're talking about the general fund or a special revenues fund, we would have most likely voted in a budget and put that information in, having appropriations approved, and then expenditures are recognized when we purchase or invest in or acquire or have built those assets. So those expenditures are at the fund level, especially when we're talking about the general fund. When we have these general capital assets, again, think of the fact that we're talking about governmental funds. We're not talking about the proprietary funds or the fiduciary funds. We're talking only about governmental funds. So if you need to go back a couple of chapters and review this one more time, there are 3 distinct types of funds, and it's all in your PowerPoints, and we've discussed it in earlier lectures. So these general capital assets are for governmental funds, one of the 5 types, not proprietary or fiduciary. Now these proprietary and fiduciary funds, they will acquire capital assets, but they're not going to be referred to as general capital assets. In other words, used for the general government at large. Proprietary funds and fiduciary funds, when they have their own capital assets, then we're going to record and report in those particular fund types and at the government-wide level where applicable based on those other fund types. So try to keep this stuff separate in your mind. Right now we're talking only about governmental funds and the governmental funds acquisition and treatment and reporting of general capital assets. Capital projects funds. We have stated earlier that these are recommended to be set up when resources received are restricted, committed, or assigned for specific purchases or constructions thereof. All right, so many times a capital projects fund is set up specifically when the amounts are basically earmarked for what's going to be done with them in a major way, some type of massive capital project to be implemented by the government. In regards to these last two, historical cost and acquisition value, thankfully, you all have been through multiple classes, hopefully by now, and you understand the concept of historical cost. And basically what we're talking about is when we recognize that purchase or the building of an item, that it's not only the purchase cost, but it's all cost incurred in order to make that asset ready for its intended use. So we've covered this in past courses for sure. When we're talking about the term acquisition value, what if the government is actually the recipient of a donation of a piece of land, of some type of historical treasure or art or something else? In those cases, we would need a value at the date of receipt, and that's what we would record it at. So what's it worth when the government receives it? In regards to these amounts that we go and put in our system when we do acquire it, again, think of the fact that normally the government is generally acquiring by outright purchase, or sometimes they're having it made or built by a third party. We'll talk in a later video about the fact that sometimes the government doesn't actually purchase or acquire it to keep forever until they decide to get rid of it or wear it out. Sometimes the government will actually lease some assets, and we'll talk about that later. When the general capital assets are purchased or built, think about the fact that where this funding is going to be coming from. Sometimes we may have to issue long-term debt. Sometimes we may have resources coming in that are going to pay for them over the long haul via taxes. Maybe we expect grants to come in, special assessments that we may put on parties that are benefiting from the investment in the capital asset. We could even have transfers in helping us to pay for these, or even, like I mentioned, as a gift. Capital assets can even be paid for by a combination of these kinds of things. Again, think of the millions of dollars that governments spend on, for example, just our critical infrastructure. In regards to our required disclosures for capital assets, as we have already mentioned, we've got those two different levels of accounting and reporting that we've got to keep up with, and that at the government funds level, it's going to show up as an expenditure, but then at the government-wide level, we are going to need to report things at the statement of net position. Why are we showing it on the statement of net position for the government-wide? Let's think back. With those governmental funds, they have a balance sheet. And if you go back and look, the funds only show the current assets. They don't show the long-term assets like the items we're talking about. So at the government-wide level, that statement of net position is where these assets are going to show up because they're long-term in nature. And then on the statement of activities, for those items that have depreciation applicable to them or amortization applicable to them, those expenses are going to show up on the statement of activities. So let's get more specific with these two right here. When we acquire an asset that requires us to capitalize it based on the amounts set up, we're going to need to recognize the item as an asset on the books at the government-wide level. So we're going to be debiting an asset account, and we're going to make sure that it shows up in the appropriate governmental activities account. General capital assets are in the governmental activities column of the statement of net position. So if you want to pause the video and go find yourself one of our prior examples in the text of the statement of net position, go and look there and find some of these types of assets and how they are showing up. You'll see that any of them that are depreciable are going to be shown at net. And you guys hopefully understand what net is. It is the historical cost minus accumulated depreciation up to the date of the statement of net position. If it is an item that's amortizable, then it's going to be net of amortization. If it's not depreciable nor amortizable, it's going to just show up at historical cost. Note, regarding depreciation and amortization, any systematic and rational method is acceptable. So think about that. The government can kind of choose what's our useful life, what's our depreciation method that's going to be used, and that's what they're going to use during their bookkeeping. Fund levels, like we said, show expenditures, and recall that the balance sheet only shows current assets, but at the government-wide level, it's going to show the applicable value. Also think about on the government-wide statement of activities. Depreciation or amortization expense is going to show up there, and it needs to show up in the governmental activities column because we're talking about governmental funds, general capital assets. And it also needs to show up more specifically by function or program. Because again, we're supplying users with information and they need to know what it's costing to provide that specific function or that specific program. And depreciation is part of our ongoing provision of those services by function or program. In regards to our disclosures, GASB does have requirements. In the notes for the general capital assets for governmental activities, again, it's going to show up in the governmental activities column, and we want it divided by major classes, and we want it divided again by depreciating items and non-depreciating items. Again, you can pause the video here if you'd like and go take a look at some examples. We've got land is not depreciable, and then buildings are depreciable. So go and take a look at just those two and how they show up differently. In regards to policies and disclosures, the government must disclose how they go about capitalizing the assets and what their process is for the estimation of useful life and their depreciation method. In regards to other things that must be disclosed, the government has to show the balances, the beginning of the year balance and the end of the year balance, and they must also show those separate from the accumulated depreciation. So we need to be able to see the historical cost of the items and then what is their accumulated depreciation to date. And then somebody could calculate the net between those, couldn't they? If the government has made any acquisitions during the year, they must disclose that. If they have disposed of or sold off any of our general capital assets, we also need to have notification of that information. Depreciation expense for the year needs to be disclosed, and again, we want to see it specifically by function. And then for historical treasures or works of art, if they're not being depreciated, we need to have explanations as to why they are not being depreciated. Governments have an option. They can either capitalize them and depreciate them, or capitalize them and not depreciate them. There are criteria for not depreciating. These things that I'm about to go over are also applicable to non-governmental, not-for-profits. So you can make a second copy of this slide right here and save it for later when we discuss nonprofits. In order for it to not be depreciated, it must meet the following three criteria. The item, a work of art, or a historical treasure, must be held for public education, research, or exhibition. I've got a typo here. It must also be cared for, preserved, protected, and kept encumbered on the books. And there must be a policy in place where if the item or items, if it's a collection, are sold off, that the proceeds from that sale are only able to be used to acquire other collections or items. These are non-negotiable things here. All three criteria must be met. Again, the government needs to make disclosures if they are not depreciating.